I've gotten a lot of requests saying that people are happy that I'm covering SoFi, but what they really want from me is my actual opinions on the matter rather than just covering the actual news. So in the latest interview that CEO Anthony Noto actually did with analyst Mike Ng from Goldman Sachs, there was a lot of great points that were brought up that shed a lot of light onto the SoFi stock that I want to talk to you guys about and actually give my opinion on everything that was said. But before we jump into it, I just want to say that both the audio and the transcript are both offered to us by Seeking Alpha, which I really appreciate them. And then they also said that they'll give you guys, as viewers of the channel, an amazing discount that you can't find anywhere else. Go check that out in the description down below. Now, starting with the technology that actually runs SoFi, we got a little bit more insight on this.
We have a core technology we built for ourselves in lending. We have a core technology for checking and savings that we license from somebody. We have a core technology in credit cards that we license from a different partner. And then we have a core technology for invest that we license from a fourth partner.
Now, the problem with having so many different cores is not only that we pay much more fees because we don't have any discount rates because we're not using multiple products or anything like this, but also the fact that it's very hard to transition a lot of information from one core to another, right? It actually makes the sales process a lot harder for us considering that we have so many different systems. And SoFi's been doing well on the cross-selling side even with different cores, but how much could we actually improve on that if we actually were to get one core that controlled all the client's information and all the data within that? You're talking about erasing all those fees, because even if it was on one core that we had to pay one system for, I mean, that would be expensive, but considering that we own the company that builds the cores, we won't have to pay anything. And then all the employee efficiency of just having everything under one roof is going to be absolutely phenomenal. But there's a caveat to this, as Anthony Noto actually goes on to say this.
We wanted to prioritize the go-to-market strategy externally first to make sure we had big client wins and we solidified the roadmap of the businesses together before we spent time on transitioning SoFi products over.
And this is what they mean by SoFi actually not transitioning over till 2024. Now, even Anthony Noto said this, that it won't even take that long. Like, it doesn't take very much time to actually switch over all the cores. It's just a matter of they're not going to be doing it for a very long time because they want to collect as much of the market share as they can while these actual cores are switching over to more cloud-based technology. SoFi is a guaranteed client for Technisys, right? So they're not going to go with another competitor, but every other financial institution has not decided which company they're going to go with if they're actually transitioning into this new type of platform. So whenever we're actually going out, we want to go after the people that haven't decided yet and actually try to win them over. Once we've actually got a list of large clients that we want to work with, then we can go back to the beautiful SoFi platform and say, okay, you guys ready? Now let's switch over. It's a beautiful strategy, and it's what's actually going to make our growth rates much higher in the years to come than if we were to actually take, some of those sales teams or some of the engineering teams off of that to work on our own platform. This is the same reason and mindset for why we haven't become profitable yet, right? We want to focus on actual growth in the market share, then we can actually figure out how we can do things more efficiently. That's been the way that SoFi has always done it, and it's why we have the growth rates that we do. I think that we were being very conservative whenever we said that, the growth rates were going to be around the 20% mark for Technisys whenever we acquired them. I think we were being nice to the CEO. I think no one really knows how Anthony Noto goes to market with a new product. I mean, he is very, very aggressive, and the growth rates might even seem very explosive within the next couple of years. And Anthony Noto actually shares some more light on that about how they've been going to market.
I think the biggest surprise is the number of inbounds that we've gotten and those interested in talking to Technisys and Galileo together from large financial institutions.
This is massively exciting and something that maybe Galileo couldn't have gotten by themselves or Technisys couldn't have gotten by themselves, but because we have bought in both of these clients, that we're actually able to offer something truly amazing. If they actually do start to bring in some of the large financial institutions, this could completely change the full valuation for the two acquisitions that we've made.
The pipeline is pretty rich. We hope to have some wins as we go into 2023 to share with investors.
A rich pipeline is great, and that can translate to a lot of accounts, but from following Technisys and Galileo, we haven't seen many press releases of new clients, and that's really what I want to see. So talking to a bunch of prospects is great, but it needs to translate to some wins, and hopefully soon. Now, there's other very exciting developments that are happening, especially on the Galileo side of the business, where they actually talk about a new side of the business now that they actually have a banking license.
The other piece of the equation that's not entirely clear to people is there's still a massive transition from physical payments to digital payments in the B2B space, and one that Galileo is also capturing both in the United States as well as in LATAM.
From the Q2 earnings call that Anthony Noto had actually brought up, he said that they estimate the B2B marketplace to be around $29 trillion, okay? And that 50% of those payments are still done by paper checks. If this actually gets translated over into actual digital payments, which are much safer, this will translate into a massive addressable market, and hopefully we will be one of the only players in this space. Now, if you think I'm suggesting that we're actually going to take on a $13 trillion business alone, you're sadly mistaken, okay? There's going to be a lot of players. But if we can even get get, a sizable foot in that pond as it starts to grow before it actually turns into this massive lake, we will be a big player, and it's something that's very exciting. It's something that couldn't have happened or couldn't even have been thought of whenever we actually acquired the business in the first place. This all changes the valuation of the acquisitions and does lead to new market caps and actual increases in the stock as this actually plays out over the next couple of years. Now, switching off of the Galileo and Technisys part for a second, Mike Ng from Goldman Sachs actually brought up a beautiful point about SoFi Money and maybe how, amazing of a product it is.
That 2% rate I know is really attractive, and a lot of members of my team in particular have taken advantage of that.
Now, how exciting is that? That members of a different bank are putting their direct deposit dollars into our bank, right? They're taking, we get our paycheck from Goldman Sachs. Can we put it here? Can I collect 2%? Obviously, right? Because it's an amazing deal. You can't get it anywhere else. And we're happy to have it because we want your deposits to fund our loans.
The other thing about the direct deposit customers that we're driving is that their average FICO score is over 700, which is also positive for our lending business and creating future borrowing customers on the lending side.
Now, this was a massive prediction that I had made earlier, saying that if people actually care about the interest rate that they actually make in their checking and savings account, they're probably the exact same people that actually care about paying off their bills and keeping their credit score high. These money-conscious individuals are the perfect people for our loans, which will then up the actual lifetime value of those clients, which are the perfect people that we want to have. But a little bit more insight into the actual product launches for SoFi, Anthony Noto had to say this.
Hopefully we'll launch options by the end of the year, and we'll round out that portfolio of products and services that our members want.
Now, if you've seen any interview with Anthony Noto before, whenever he brings up options, he said, hey, options are coming before the end of the year. Options are coming before the end of the year. Now, it's hopefully options come before the end of the year, which just adds a little bit of uncertainty and doubt that it is going to be a product that launches before the end of the year. I'm sure they're running into delays, and it must be a much harder product to launch than they originally expected. And plus, this idea of rounding out all the products and services for SoFi is an amazing thing that can happen, right? If we offer everything that an individual could actually want from our business right now, then that's amazing. Then we can actually start to work on improving all the products that we might have rushed out, in early 2019, like our invest account, which a lot of people say is just not up to par with Robinhood. But there's also a key word that I used there, right? I said individuals. There's also very many products that we could actually start to branch out to, like corporate accounts, for example, that could bring us into a whole new area of clients that, like I said in my previous videos, is something that Anthony Noto has been looking into. Also in this interview, it actually showed off a lot of things that were actually happening behind the scenes. For example,
there are a number of other changes we have to make on the closing side of the equation with a different partner to make sure that's being done in an expeditious time schedule.
Now, what he's talking about here is not a new product or anything like this. He's talking about funding and selling the loans that we actually collect on the platform. Now, this isn't super exciting or flashy like a whole new product is for a Catalyst, right? But this is very exciting because it can improve the profitability for each one of our loans that we actually collect on the platform.
It's baby steps, but we're moving in the right direction.
But onto their lending side of the business, he also had these things to say.
One of the reasons we entered the home loan business is that we fundamentally believe we have to be there for our members' most important and likely most emotional decision financially, which is buying a home and financing that home.
Now, this is the same reason why we just launched a new insurance product with Chubb showing off cyber insurance, okay? It's not because we're going to make practically any money on this product. Extremely low margins. What is exciting about it is just if you do want that product, you don't have to go to anyone else, and it's just building out the full scope of products so then you look to us if you actually want something rather than having to shop around at all.
About 60 to 70% of our home loans was from our existing members, reinforcing the fact that our members trusted us, and when they needed to make that big purchase that was emotionally important to them, they came to us.
I mean, need I say more? I mean, that is a perfect idea to show how good our actual cross-selling ability is, and it's the exact reason why we actually have that product is because we're not putting that much effort into it. If you guys want it, you can have it, but the margins are low, so we don't even really care. But now that student loans are coming back and the strength of our other products, 2023 is looking amazing, and Anthony Noto says this.
There's $1.7 trillion of unfinanced student loans with an average cost of about 6% for graduate loans. That demand coming back, combined with still strong trends on personal loans, will be the first time in a number of years, almost 3 years, that we've had both those businesses doing well with tailwinds.
But this is why we've been collecting so many members on the SoFi Money and SoFi Invest, is that it's easy to be able to take 60 to 70% of the actual, our existing clients and bring them over to our lending products. Now, that's what's really exciting, right? The member count is very important, not because it actually brings in revenues right now, but it will whenever the student loans actually transition. We'll have that data from the clients to know which ones are student students and which ones aren't. And being able to just quickly send them out a quick message or email or something like this and just be like, hey, you can actually pay your student loans off with SoFi redeem points or with the actual money that you have directly in our accounts. Go ahead and sign up. It only takes 2 to 3 minutes. That gives us an instant competitive advantage against other people because we already have that members' trust. Plus, I mean, over the course of 2023, it's going to be amazing to see how efficient it is on the cross-buying side. But speaking of data, I just wanted to bring up this other part in this interview where Anthony Noto actually shows off the benefits of taking in this much data.
There's also a new use case of home improvement. When rates are higher, there's less purchases of homes, there's more remodeling of homes. So we have a great use case in home improvement. We also see people doing things from an energy efficiency standpoint and helping to fund solar installations, etc.
Now, this is very useful and extremely effective whenever it comes to the marketing of these loans if we know exactly how they're spending the money. It's extremely useful, and I already know SoFi is going to take very good advantage of this information. Now, these next couple parts are just amazing miscellaneous parts that whether Anthony Noto or Mike Ng actually brought up. First off, talking about the actual market share of our personal loans.
We're at about 5.5% market share of our demographic of 680 and higher, and we think there's a large opportunity for us to continue to gain share.
Now, this is something that I was so far off about, okay? I thought that as SoFi actually began to grow, that our credit scores would have to go down because we're getting more of a national average the larger we get. The truth is we're so small in this area that we can continue to grow and actually expand without having any losses whenever it comes to our credit score because there is so many people in this space. It will be a very long time until the points that I have actually brought up actually come to light. Now, Mike Ng actually brings up this great point. Anthony Noto has a response, and it actually changes the guidance of this company for a lot of institutions.
The company outlined about $200 million plus of incremental annual EBITDA from 2023 to 2025 from the bank charter.
It all got delayed by a year because the bank license was delayed by a year.
So now we're looking at $200 million of EBITDA from 2024 to 2026, okay? Which is still amazing, but it could change some projections if people were going off of those numbers. But now going back to the partners that we have on our loans, Anthony Noto actually brought up something on this call that actually cleared up some of my suspicions.
If SoFi does not approve the loan and the partner or partners approve that loan, they take on the credit risk, they take on the financing risk, we do the servicing, that person becomes a member of SoFi and we can cross-sell them other products and services.
Now, the part that I had suspected is that they would still be a SoFi member, the money would still get paid through our platform, but we would just be sending the money straight off into the partners and they would be handling all the financing and the credit risks, okay? The part that I'm very excited about is that we can still cross-sell them onto other products if we deem, their credit score fit for a different product, they're still our member. That's extremely exciting, especially for our customer acquisition costs, and Anthony Noto actually had more to say on that as well.
And so the customer acquisition costs have been very stable and very predictive of the spend and growth that we expect from that spend. So quite happy with them. On the checking and savings account side of the equation, because we have the bank now, those customers have greater lifetime value, so we've been a little bit more aggressive there.
This is something that I wanted to bring to light. First of all, everything whenever they're looking at customer acquisition costs is exactly what they're expending depending on the amount of money that they're spending on advertising. Awesome. But also, this is their top of funnel strategic strategy, and why we're not profitable right now is because we're focusing on member growth, collecting market share, and then we can actually sell them into, credit cards, loans, home loans, whatever, that actually start to bring up the actual customer value depending on what they can actually cross-sell into. But because they're already a SoFi member, we don't actually have to pay that customer for coming into that product, okay? It's very, very easy to pay a customer, sign up for SoFi Money and get $15 right now, versus sign up for SoFi Lending and get $300 off your first payment. That's why we want to get them top of funnel and work their way down. That way we can just say, open an account with SoFi Personal Loans. We're not offering you anything. Just sign up. The overall interview for SoFi was amazing. Can't wait to see more, but that's not the only thing that's been developing over at SoFi. If you want to actually see the cost of the loans that they've been inquiring, make sure you guys check out the video right here. But aside from that, make sure you guys like the video and subscribe down below if you want to see more financial content just like this.